What is going on, investors? Hopefully you guys are doing well out there. That is right. We are back again here on the Investor Channel, where every Friday, except for last Friday, we recap all the major news and the technical chart patterns from all the major FAANG stocks. And we've essentially got 2 weeks of news to cover here on the channel. So we better not waste any more of your time. Kick back and relax as we kick things off like we always do with Meta Platforms. Start of the week at 305, sliding down about 1.6%. Finished the week close to $300 per share. The company is expected to be developing a new AI model to rival OpenAI's ChatGPT-4. The model, expected to be ready by next year, is designed to be more powerful than the open source Llama 2 model that was readily available across many platforms just about 2 months ago. Meta taking a very interesting approach as they develop and train these models and then often just release them out into the community. From a revenue model perspective, from an ability for Meta to profit off of these things, it's still a question mark, but what it is doing a little bit is hampering the development of maybe other models out there. How much money, if you're ChatGPT or OpenAI, how much money are you going to pour into developing your next model when you know Meta is going to be developing something similar and give it away for free? Very interesting business model that Meta is taking on, and we're going to be here to see it unfold. The Senate, that is the United States Senate AI Summit, gathers tech leaders and powerful players for those all-important closed-door policy talks. We had some public testimony, and look, here's the deal with Washington. I think you guys know this about me and figured this out about Washington as well at this point. It's what makes it to the president's desk. And in a very important election year where you have one candidate that is like, I don't know, he's got like 95 indictments that they're trying to bring on him. And then you have another candidate, which they're attempting to maybe bring some impeachment charges against him. It's going to be an all-out war, and I really don't see a lot of things being able to get across the finish line, including AI, but a lot of stuff is going to be happening behind closed door. The other thing they're doing in Washington is they're lining up campaign political donations. So how do you do that? You usher the companies up in public and you say, we're going to do this, we're going to do this, and we're going to do this. And then they meet with you behind closed door, and Google says, we're going to pay you this. And Meta says, we'll pay for this. And all of a sudden, status quo in Washington, D.C. Maybe I'm too jaded, maybe too bitter about what's been going on in Washington for the past 20 years, but that's the state of things as it stands. WhatsApp's head denies a report that a messaging app, WhatsApp, is exploring ads. And I don't know why that would necessarily be a bad thing. The more Meta can monetize its WhatsApp platform, which has just, billions of users essentially worldwide, would actually be a good thing. Moving on to Apple. Started the week at 178, and in a week where they announced their all-important iPhone announcement, shares of the company down nearly 2%. Finished the week very close to $175 per share. Apple is said to see subscriber boost from Lionel Messi's debut. If you already know this, in order to see every single MLS game, you actually need a subscription to the MLS season pass, if you will, through Apple TV Plus. Apple very smartly negotiated this deal before Lionel Messi came over. I don't know if they were anticipating that or not, but what would be very interesting is if the MLS becomes a home for these kind of European stars that are towards, and like, I don't want to predict the end of Lionel Messi's career, but my guess is his glory days in European soccer are more or less over. Well, can you come over here to the MLS and get your kind of the next leg of your career? Is it like the senior tour, if you will, of the PGA Tour or something like that? I don't know. All I know is he is likely driving huge amounts of subscribers to this. And if the MLS becomes more or less the outlet for stars of the European soccer leagues to come over here when their time is done over there, well, holy crap, Apple has got a great product on their hands. Apple slipped, though. as China reportedly orders government agencies to stop using iPhones. Chances are, if the government tells you to do something in China, it's more or less an order rather than a suggestion, although I don't necessarily think this is going to move the needle too much on Apple, as obviously their devices are used worldwide. Apple said to boost spending on conversational AI to millions of dollars per day. We'll see what ends up coming out of this. I saw a very funny meme that Apple had spent $24 billion on R&D over the last year, and they delivered an iPhone, which is more or less the same. I guess we'll get to that here in a minute. Qualcomm popped earlier this week on reports that Apple extended its chip supply agreement until 2026. Apple has been looking to create more of their device from in-house silicon and their own proprietary designs. They've managed to do that in partnership with ARMS Holdings, which went public this week as well. They're producing all the M chips and the A series chips that go inside of the phones. What Apple hasn't been able to do is replace Qualcomm and Broadcom in particular, and that is obviously good news for Qualcomm. And I think what we're finding is, to replace the processing chips is one thing. Replace a modem chip where you have patents and proprietary stuff that Qualcomm owns and has control of, obviously much more difficult. Apple, obviously we kind of buried the lead with Apple. They unveiled a new watch and the new iPhone 15, which has a titanium casing. Despite the titanium casing, the phone is almost identical to what you had last year. On the high-end side, the Pro Max gets about $100 price increase. Now, obviously, a lot of these phones are financed either directly through Apple, through their credit card and their own financing arm, or through a carrier like AT&T and Verizon. This is the playbook for Apple, and it just keeps working until it doesn't. Who knows if another phone maker is going to be able to come along and carve into Apple's market share here in the United States, and not just their market share, but the amount of profit that they make on these phones. Certainly Android devices are as popular or more popular, but surveys show that teens and kind of the future buyers of the iPhone vastly prefer this device than others. And so I tell you what, when it ain't broke, I guess you don't fix it. Apple said to put chip veteran in charge of its glucose tracking project. We saw a rumor several weeks ago that this potentially could make its way into the new high-tech Apple Watch, but that looks like maybe that is coming later. My guess is this would come into a refreshed premium Apple Watch, or the Ultra Apple Watch, which I saw that Apple might refresh later this year as well. Moving on to Amazon, start of the week at 140, essentially flat on the last 5 trading days for Amazon. Amazon is doubling down and offering supply chain services to sellers. This is very important with Amazon. We're going to go through maybe 2 or 3 press releases on this company that shows you the direction that Amazon is going. Now, Amazon tries all kinds of things. They throw a bunch of mud on the wall and they tend to see what sticks. And then what sticks, they tend to double and triple down on. Now, this type of press release is not going to get a lot of attention, but it is a very interesting project. The company is going to enable sellers to automate parts of its supply chain. Essentially what Amazon is going to do, if I'm a manufacturer and I'm making, let's just say I'm making notebooks, okay? I make a fancy notebook and I sell it on Amazon. Amazon is going to pick that inventory up from my manufacturing facility around the world. Let's just say I make this in China or Taiwan or one of those countries. And then all of a sudden, I've got to pay customs. I got to get the logistics lined up. I got to get it to the right port here in the United States. They are going to handle all that. They're going to ship it across borders. They're going to handle all the custom clearance, all the ground transportation. So once it's at the port, it's got to get off the port. And then I got to take ground transportation to my warehouse or Amazon's warehouse. They're going to store the inventory in bulk. They're going to manage replenishment. So as I start to sell my orders, they're going to replenish that, and they're going to deliver these products directly to the customer. And this supports one of the press releases that we announced maybe 2 weeks ago with Amazon, is that they're opening up shipping. So I don't necessarily have to be selling this book on Amazon. I could potentially be selling it on my Shopify or my Etsy or anything like that. And this service would still likely be open to me. I probably would have to have an Amazon account, sell some of these notebooks on Amazon, but Amazon is going to be handling a lot of this, and this is going to take the weight off of a lot of sellers, and this is very, very cool business. And the fact that Amazon is doubling down into this actually shows you where their focus is going. Their focus is moving more into logistics and moving items around, okay, from manufacturing facilities to storage facilities to the end customer. Amazon is finding, very similar to AWS, they found that they had a competitive advantage when it came to data center storage and delivery of content. I think what Amazon is finding is they have a competitive advantage moving items around the world and the country. They have a huge amount of experience in that, and they're going to leverage that and give that service as a way. Obviously, they're going to do it for a profit, but they are going to do that for other sellers. Amazon to hike wages for contract delivery drivers. This is also supports the previous press release that they are doubling down on those delivery, what they call delivery associates. These are the people that drive around in those vans and deliver goods for you. These are not actually direct employees of Amazon. It's very similar to the FedEx model or a franchise model. Essentially, you open up a franchise where you get an Amazon van and you deliver packages. But Amazon does do a direct investment into these third-party programs, including raising their salary to $20.50 per hour, which out here in California is not bad, but certainly in other parts of the United States, $20 per hour is probably a very, very attractive wage. Now, Amazon could see some weakness on an FTC lawsuit looking to potentially break up the company. Folks, it is no coincidence that you have an DOJ investigation and a trial or hearings this week as it relates to Google. We'll get to that in a second. You have the FTC coming out of Amazon. You have all the AI heads heading to Washington. Make no mistake, guys, what this is about. This is about wringing the neck of companies that traditionally donate heavy to one political party. That political party is bringing these companies to Washington, wringing their necks in order to get them to continue to make those donations in what many feel on either side of the party is a political and a very important election cycle that we are about to move into as it relates to who gets elected this time next year. It's all about money, power, and votes. And the way you get money is you wring the neck of the major tech companies. I don't really think this is about doing things for the American people, as jaded as that may sound. Moving on to Netflix. Speaking of moving, holy crap, I had to double check this. We started the week at 444 on Netflix. And wait till you see the technical chart patterns. It is not looking good for Netflix. Down nearly 11% to finish the week at we'll just call that 397. Again, you're going to want to stick around and see the Netflix chart. A break of trend. Spoiler alert. Now, Netflix drops early this week as their ad tier has not seen as driving revenue in the short term. That's what the CFO says. And I find this interesting, the fact that the company does not see meaningful impact in the near term of the advertising tier. And so shares of Netflix, I think, had priced that in to a certain degree, that you're actually going to see this revenue actually hit the top line. Not necessarily the bottom line at Netflix, but the top line. We were going to see top line revenue growth at Netflix, but we're probably not actually going to see that on the ad tier. Surprising to me. I would not have guessed that. But look, Wall Street, this stock probably did get out in front of those expectations. The stock walking that back a little bit as the news comes in. Moving on to NVIDIA. Start of the week at 450, down 2.5% to finish the week 439 on the dot. Databricks raised over $500 million from investors, including NVIDIA, at a $43 billion valuation. Holy crap. Essentially, what NVIDIA is becoming is not only the number one and premier GPU maker as it relates to data center, but they're also investing. They're basically coming like a venture capital firm in terms of their investments. They've got investments in CoreWeave, and where NVIDIA invests, they can fund, since they're kind of the kingmakers, right? If you call NVIDIA and you want some of their new H100 GPUs, well, they have everybody calling and asking for them. And so what NVIDIA can kind of do is make strategic investments in companies and then give them priority allocation on these hot and in-demand chips, therefore increasing the valuation and the attractiveness of that investment. I tell you what, NVIDIA is playing a very, very savvy, but I also think a dangerous game. They're playing a savvy but dangerous game. They're essentially baiting companies like Google, like Meta, like Amazon, and like Microsoft to find alternative solutions to their very expensive and exclusive data center GPUs. We've already seen Google move the route of going to their own TPU. Meta is moving that route. Amazon has already gone that route, and Microsoft is working that way too. The alternative was NVIDIA could have bowed down to these major tech companies and essentially locked them in on NVIDIA GPUs. Instead, NVIDIA deciding to allocate more to lesser known and startup names. I'm not sure that strategy will play off in the long run. Reliance and NVIDIA partner to advance AI in the great country of India. Companies will work together to build AI infrastructure, with NVIDIA providing access to its super chips. Just another example of how NVIDIA is very closely controlling where its chips go. And again, in the short run, that has created just spectacular results. It goes without saying for NVIDIA. In the long run, is this the right strategy? I guess we'll find out. AI to represent 11% of the healthcare budgets by 2024. It's according to Morgan Stanley. A lot of people think that this might be your opportunity to roll in and invest into biotech. I would say no. I actually think AI is probably one of the most disruptive technologies to come to biotech. Biotech already a very difficult industry to predict, to project, and to invest in. And now you've got technology that democratizes or really opens the door up to a lot of companies being able to do things that maybe was a specialized industry or required far more expertise. An AI supercomputer is going to be able to do it. And so we'll have press releases later. Maybe companies that we talk about every week here on the show are going to be able to create groundbreaking drugs and treatments. Moving on to Google. Start of the week at 137. This stock holding up beautifully. When you come over here and look at this from a technical perspective, it is still looking great. You're up 0.29% on Google on the week. Basically flat. We've got our first big tech monopoly case in decades, the DOJ versus Google. Again, I don't think the timing of this case is a coincidence. The DOJ comes knocking on Google's door, months before you've got kind of a critical election cycle. Google, known for taking things down from social media sites, known for blocking certain political ads, known for maybe boosting certain types of content and essentially controlling what other content is seen. But it does appear, you could argue that Google has, obviously like a 90% dominant on search traffic. And despite Bing's best effort, we ran kind of a story just a couple of weeks ago here on the show that showed you that Bing has not even gained any ground on Google. In fact, there's evidence that after they rolled out kind of ChatGPT on Bing, that it's actually lost ground to Google. And so Google just continuing its dominance, and will obviously very closely follow this case and see where it goes. The DOJ says Google spends $10 billion yearly to maintain its monopoly. Essentially what Google does is they buy the very expensive right to be the default search engine on Apple. And so it's kind of a double-edged sword, right? If the DOJ gets their way and they say, well, Google, you can't spend $10 billion to maintain a monopoly. Well, all of a sudden, Google doesn't have to spend what they call, this is called traffic acquisition cost over at Google, or TAC. Well, if Google doesn't spend this money, does it mean that users won't use Google? Does it mean that they won't keep it as the default option on their iPhone? Or if Microsoft pays for it and all of a sudden Bing's the default, Apple's going to make a way for you to change it. And there'll be like a million articles and a million videos here on YouTube showing you how to do that. Like, I don't know what will happen here. Obviously, I think this is just kind of a lame attempt to put one of these giant mega cap companies over a politician's knee so they can kind of spank them on the butt and get them to do what they want them to do. Google adds live to Chromebooks with extended support. Spent any time inside of a classroom, and admittedly, I actually have. I'm around kids once a week, normally using Chromebook laptops, and they are quite old. And every time I try to show one of these kids something on the laptop, and we're always like, man, this is slow. The internet at the school is slow, and the device, the touchpad barely works. And it's a pretty terrible experience, to be honest with you. Company is deciding to extend the software updates on its Chromebooks for up to a decade rather than the previous 5 years and 8 years, depending on when the device was sold. Google making a major play inside of classrooms. This is another thing that if you don't have children or you're not at a school, you're not an educator, you don't really see this. But a lot of things done at schools these days are done on like Google Classroom and Google Chromebooks. So the next generation of kid growing up is going to be very comfortable with Google. And, Apple played this to a T with their devices earlier in the we're talking about decades ago. And the other brand that I can think of was like Pepsi. Before you banned soda inside of schools, you could find a Pepsi machine in just about every corner of my high school. And thank God they didn't change that rule, because I loved sneaking out of class and buying a Pepsi. Moving on to Microsoft, start of the week at $336. This stock down about 1.9% to finish the week at $330 per share. Zoom CEO obviously not happy with Microsoft, and he says the FTC should look into Teams bundling in the U.S. And the FTC says, well, if you donate money to my boss, then maybe I'll look into this. But joking aside, I don't know how good it would be for Zoom if Teams is unbundled. So if you unbundle Teams and it's its own standalone product, and then it's also bundled, like, is this really good for Zoom? Maybe it's better that Teams requires you to basically jump into the entire Microsoft ecosystem. Look, I don't know. I just think Zoom is a relic of the past. Microsoft Xbox head is confident on that Activision deal completion. You've essentially got clearance from almost all regulators. There's probably some small things that have to be done. My guess is hopefully by the end of the year, that drama is over. Microsoft in a pact to build the world's largest image-based AI model for cancer detection. We all hope that Microsoft is successful in this. This is also very, 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 very disruptive to the biotech industry. If Microsoft and Google and these large tech companies that don't really have to make a profit on this type of research, they start getting into this game, what does that do to the kind of micro and mid-cap biotech startup when all of a sudden you go from competing against maybe one or two drug makers to now some of the largest companies in the world from a cash and cash flow perspective? And what kind of branding would Microsoft get if they actually start detecting and maybe even potentially finding cures for cancer? Moving on to Tesla, probably one of the only stocks other than Google that held up nicely. This stock started the week at $261, up over 5%. This one has caught a bid. Finished the week close to $275 per share. Tesla is set to pop those champagne bottles as the United Auto Workers are starting to strike against Ford and GM. Those automakers obviously just fractionally profitable. And then when you look at their EV businesses, which they're just pumping billions and billions of dollars into, those businesses aren't even profitable. And now the union is starting to squeeze the neck over at those automakers. Obviously, Tesla operates outside of that great union. Now, Tesla suppliers expected to invest $15 billion in that gigafactory in Mexico. The site is currently under construction, and the $15 billion is expected to pour in over the next 2 years. Now, Tesla, also a top pick over at Morgan Stanley with its Dojo supercomputer called a $500 billion wild card. This sounds a little bit more like hype than it is substance, but Tesla is and has been working on its Dojo supercomputer to help with full self-driving. And if you ever use that technology or seen it in action, it certainly is impressive. Now, Chinese car sales hit a record for August, and Tesla's deliveries are up. This is a change from what we've seen over last month, where you started to see maybe a little bit of slumping in sales. No, sales of Tesla deliveries up nearly 31% in August compared to July. So more or less a reacceleration of deliveries for Tesla in the great country of China. Now, EV sales surged in August, essentially just gave you this press release, but here it is from a visual perspective. We talked about this. I remember doing this video in July and saying, that's a bad number, but there was some nuance to that number. They were refreshing the Model 3, so there was some line shutdown over in China, but now a reacceleration of a number that it really compares favorably to where you've been at Tesla. Also supports maybe economic conditions in China maybe better than what is being advertised. Moving over to the technical segment of the show, where we just look at price action. And here's the S&P 500. Nothing to be overly concerned about. Yes. And the micro trend in these markets is a high, lower high, lower high. But in uptrends, you do that, right? You have these moments where you have kind of micro downtrends. You're not concerned with the S&P 500. A further pullback, not concerning. It's not until you really break trend when you really want to stand back and look. And there is one stock in this list that has broken its trend, and we'll look at that here in a moment. Moving on to Meta. Now, you have broken, basically your breakneck trend here with Meta. Not that big of a deal. It is holding this area up here, what would be mega healthy for the markets and for investors in particular. Instead of these like breakneck skyscraper type formations where the stock's basically going straight up, consolidation sideways would be very nice, especially for longer term investors trying to inch some money in as you get paid and those types of things. Hard to know if that's where we're going with Meta. There's no indication that the uptrend is over. It could be a temporary break with a resumption back to the highs, or this could be the end. It could be that was the rally and now you're in what some people might call a bear market, or you're going to start a new downward channel. There is no indication right now of where we're going, and so there's no reason to really sweat it until we get more of that indication. Also, Apple looking very similar to Meta. You had this kind of breakneck rally. Once you broke trend, that was it. That rally, if you don't recapture it very quickly, it's pretty much over. Okay, that rally is over. Shorter term, yes, you're making new lower highs, lower lows essentially, but it's not convincing enough right now to tell you that, oh yeah, you should be either short Apple or you should be avoiding it completely. You've got consolidation up here. You're consolidating around the previous highs. That makes a ton of sense. You have these euphoric moves. Sellers dry up as you break out to new highs. You've pulled back to those highs. Buyers are emerging. So we're just going to keep taking a wait and see attitude as it relates to Apple. Amazon is in a slightly different position. As you can see, Amazon is actually still in a kind of what we'll call a skyscraper or kind of a moonshot formation here. You're making higher highs, higher lows. I mean, even more recently, this is a high, this is a higher high. Looks like to me, Amazon wants to kind of retrace, if you look at the volume profile, heavy consolidation up here in the 160s. Wouldn't surprise me if Amazon can kind of work its way up into the 160s and then meet some resistance there. Now, probably the most interesting chart that you will see of this group is Netflix. Look at this, folks. Big red reversal candle and a confirmation, like double candle underneath this. And this purple line, look, I hate adjusting lines to like meet your narrative. No, this line should be like right there. You have closed below this trend. Now, what does that mean? That means this trend is over. I would say that trend right there is pretty much over. Now, does it mean you make one of these like big reversals all the way down here? No, it doesn't mean that. Look where you've got support for Netflix. This is the volume profile. You got huge amount of consolidation for the shares right in that 360 range. You could call this like reverting to our mean. If you watched our interview with Larry Benedict earlier this week, this is exactly what he's talking about. Anything over like 390 on Netflix is kind of away from the mean. Reverting back to it, pulling back to it, would be back into like the 340s, 350s. Oftentimes, though, when you get kind of a reversion back, you kind of overshoot it a little bit. So I actually would be interested in Netflix at some of these lower levels. You still could argue that you're in some kind of uptrend. And again, I hate changing indicators to like control the narrative, but you could also pull up like a monthly chart. And if you pull up a monthly chart of Netflix, you're still in a pretty good uptrend. I think we're heading for sideways consolidation with Netflix. We talked about this like maybe a week or two ago, how Netflix kind of led the FAANG stocks on the rally. I think it's going to lead it into sideways consolidation for the rest of the year. I think you're going to have sideways consolidation for the rest of this year. And look, in an election year, potentially something to that effect as well. Now, moving over to NVIDIA, you really have to zoom in on NVIDIA to get really clear picture of what's going on. This is just a beautiful, beautiful uptrend NVIDIA is on. Higher lows, higher highs. Nothing convinces me now yet that you're going to break through this, but you really do want to monitor this with NVIDIA. You've got this level right here at we'll just call it 400 on the dot. You see a close below 400 on NVIDIA, essentially taking out that low. It would take away the uptrend you're in, and then it really increases the probability you fill this gap with NVIDIA. You start filling this gap with NVIDIA, and I think you look at it as your second bite at the apple. If you sold too early or you just never bought in on this stock, don't worry. You might have an opportunity here if you fill this gap. Otherwise, we're actually looking for the stock to rebound at this level. I suppose a very shorter term trade is you could put a buy order on NVIDIA somewhere in this range. I would have a stop loss at 410. So you're risking like $20 to $30 to make a new high up here at like 515. It's not the best risk reward. You're risking like 20 to make 50, but essentially that's where NVIDIA is. It's at the crossroads of this trend. Will it continue or will it break down? We'll certainly be here next week to discuss that. Now, similar to Amazon, Google is still in its long-term trend, and maybe long-term's not the answer, but really the reversal uptrend that it has been in. Very similar to Amazon. This is still making higher highs, higher lows until you break trend like Netflix. There's really nothing to do there. Microsoft looking very much like Apple and Meta to a certain degree. You were in this skyscraper type uptrend. That got broken, but look, now you're just consolidating where these highs are. Also, too, remember, all of these stocks practically are in these like mega uptrends. Look at the mega. I've got like a purple line here with Microsoft. It can go back almost to the 2000. I mean, you could probably actually stretch that all the way to like the 2008 lows. It's not perfect. It's not drawn in there properly, but you can see here, we're still overextended over this purple line. What can often happen with these names is you can like chop sideways and then all of a sudden you're back at trend. That's why accumulating these stocks when they go sideways like this, actually not necessarily the worst thing at all. And then finally, Tesla bounced off one of the most purest. I mean, we're talking about the most purest technical spots. I think we talked about it here on the show. That like the 220, 215 range was a back tested trend. I would say that's over. There was consolidation there as well. If you stretch out the volume profile, well, we've probably got it stretched out a little too far. If you shrink it in, look at where all the demand was. It was right where the shares bought. So shares of Tesla bouncing off that range. Also very similar to Amazon, Google, Tesla also in kind of its reversal uptrend where you're making very convincing higher lows, higher highs. Tesla looks like to me, it wants to make a new high, which should take you up here to about 315. It would take out these highs. You keep that momentum in Tesla. There'll be an absence of sellers as you approach over like 350 on this stock. It is looking very, very, very good from a technical perspective. Now, finally, the NVIDIA effect is my webinar coming up September 20th. I'm doing my full-blown promotion for legacy research, earning my paycheck here. Look, I am not asking you guys to buy anything. This is not a sales pitch. This is really if you just want to see me on a very cool set, talking about NVIDIA, talking about AI, talking about technology. I am not hard selling you on this thing. Inside of this, they'll be trying to get you to buy something. They'll be trying to this is how my company makes money, okay? They're going to try to get you to buy something. I'm here to tell you, I don't expect you to buy it, and this is not a push for you to do that. But if you want to check out this webinar, there'll be a link down in the description below if you want to sign up and watch it with me. And watch me on September 20th at 8 p.m. Eastern time. Now, what I will be doing is my publisher has a different service, which equates to about $4 per month, where you get a lot of my research. Look, $4 per month would probably be cheaper than if I were to sell it on my own. And so I will be providing a coupon code for you on that, since $4 per month is actually a discounted than the normal rate. That is something that I will recommend in the future. Again, this is not a sales pitch. If you want to sign up and just watch me talk about AI on a beautiful set and hear me pitch our latest product over at Legacy Research, you're more than welcome to sign up, and I would love to hear what you have to think about our presentation. Thank you very much for tuning in today. I am so sorry we did not have a video last week. That was not according to plan. Unfortunately, just a comedy of errors did not allow the video to happen, and then finally enough time went by where I was like, well, I might as well just come back next week. We've got the best subscribers, the best fans, and your guys' support is why this channel has the success. It's not my success, it's our success, and I owe it all to you. Thank you for your support, and I will be back again soon. And next time I'm traveling, I will make sure I can get this video out on time. Thank you for being so loyal, and I appreciate it. We'll see you again next week. Have a safe weekend. Good luck with your investments.